Ladies and gentlemen, welcome back to the channel. AMC's cost to borrow rates on the day are over 850%. Historically, whenever we have gotten to these levels, you have always seen a rally. Now, you have a couple more things going for you. It's not just the data, it's not just the technicals, it's not the market environment. It's all of those things that are really in our favor right now. And specifically on the technicals, I do want to elaborate on this quite a bit here in this video. Today you are approaching this downtrending level. This is a level, and it's the blue line right here, if you guys are unfamiliar, that we've talked about for a while now. Ever since the June short squeeze or gamma squeeze, whatever you want to call it, AMC has not been able to break above this downtrend. That is because we have been in a downtrend. Well, now it looks like the perfect storm is coming for the hedge funds to really get some explosive moves higher in AMC stock. And most certainly the data supports this, the technicals support this, and like I just said, the broad markets might be able to support this as well. So we have a lot to talk about, guys. In after hours, there's actually going to be three very big earnings: Google, Amazon, and Apple. If these guys come in line with expectations, let's say these stocks as an aggregate goes up 2% or down 2%, I don't think that is going to be something that could make or break this market. But if these stocks go up or down an aggregate of, call it 10%, simply just off of the market weighting that these companies have. For an example, Apple is 10% of the NASDAQ. If Apple drops 10%, it's going to send the NASDAQ up 1%. If Apple goes up 10%, it's going to send the NASDAQ up 1%. And Microsoft and Google and Amazon, these are other large companies. But today is really interesting because you have the three biggest companies, Google, Amazon, and Apple, all reporting earnings in after hours. And if you do get bullish earnings from here, you are literally set up for a massive short squeeze in the broad markets. And I think, let's be honest here, the markets are so bullish right now based off of what Fed Jerome Powell said yesterday that you're going to have to see very bad earnings to get cold water poured on this market. You're going to have to see Apple fall 15% to really get this market to slow down and reevaluate where we're at. It's unlikely to happen. So it's more likely than not the markets will stay in a bullish mind frame, and AMC could also start to get a lot of that squeezy McSqueezy. So let's get into the Ortex data first. But before we get into that, if you guys are just waking up, if you didn't see what Fed Jerome Powell said yesterday or why the markets are rallying, one, it's because Facebook is up 25%, so that's definitely helping out technology stocks drastically on the day. But bigger than that, it was Fed Jerome Powell, and he said for the first time since COVID that we are finally seeing disinflation. That's saying that inflation is slowing down, in other words. It's not deflation, it's not, in negative territory. Deflation is actually worse for the economy than inflation is, but you're seeing disinflation, which means inflation is slowing down. And out of the actual report that came out at 2 p.m., the Fed took out all of the causes that were causing inflation. The last press conference and the last report we got December 16th, do you guys remember that one? That also sparked a pretty aggressive rally. The Fed said the war in Ukraine, COVID, and supply chains were still adding to inflationary pressures. Well, all of that was taken out in this report. The only slightly negative thing you could say throughout the press conference, throughout the report, was that the Fed used the words ongoing rate hikes to describe what their policy is going to be going ahead into the future. And initially people thought ongoing rate hikes, that means more than one, and that's correct. But again, we didn't get that bearish, that hawkish verbiage from Fed Jerome Powell for the first time in a year and a half now on the actual press conference. So everyone and their mothers were expecting the Fed to give a pretty dovish statement and then to be really hawkish once he got to the podium. And none of that happened. It was dovish all the way around. So this is leading people to believe a pause is coming. So that's a big reason why the markets are so bullish right now. And like I said, it's going to take really bad earnings to send the markets down. And if these stocks go up off earnings, it could just add to this overall bullish sentiment in the market. So that's a quick rundown of what we have. External factors to AMC, the earnings and after hours, that is massive. And then also Fed Jerome Powell, just the way yesterday turned out to be so bullish, it's something that could last in the markets for a while. Because if we get through earnings season, everything's okay, then all we have is economic data coming out. That's all we have. You're not going to have Fed Jerome Powell for another month. You're not going to have any more earnings for 3 more months that are big, right? Big companies that can move the markets in a bigger way. You're not going to have any of that for a while. So there's not really a reason to sell off unless we get new information, which nobody can forecast that. So as of right now, market conditions are looking good for AMC. And why that is so important is because if the markets are overwhelmingly bullish, just as a whole, like we've seen over the past couple of weeks, and specifically now after Fed Jerome Powell, if AMC does get good news, if AMC does have good earnings, it can be rewarded a lot more than, say, if the markets are falling off a cliff. The same good news in a bad market or a good market is going to give you a totally different result. And just the overall sentiment change that we have seen in the markets going from bearish now to super, super bullish, it will lead shorts to cover on their short positions a lot faster than what they otherwise would have if the markets were hitting new lows. Hopefully that makes some sense to you guys. At the same time, there's not a lot of positioning in the broad markets, and AMC does have the shareholder vote coming up in the very near term future, as well as earnings that could also give the stock a lot more juice. Now, speaking of juice, we need to get above this downtrending level, and this downtrending level is important because it's showing you that you're getting rejected throughout all of 2022 where the trend line is. So this trend line was really formed back here from June, and then where you hit in September of 2021, and where you subsequently started to really fall off in November of 2021. The trend line was formed there, and you followed that trend line throughout all of the rallies that we've seen in 2022, which was one in March, one in August, and one in November, and you got rejected at this level every time. Well, now you're approaching this level, and the market conditions have very much changed, and I do think we're going to get good commentary on earnings, and I think we're going to get good numbers. And if you get above this level heading into earnings, one, that's going to tell you markets are pretty bullish on AMC. Typically, if a stock's going to have bad earnings, usually market makers and money managers, they kind of know or have a good sense of what those numbers are going to look like. Why do you think Facebook ripped for the last 2 months heading into earnings? Someone probably knew earnings were going to be good. Same thing with AMC. I don't think AMC is the exception to that rule. So there is that, and the technicals are going to be massively important tomorrow. If we do have good earnings from the 3 big dogs, you're going to break out above this trend line. It's only going to take, let's see, it's only going to take a roughly like 3% move to actually break out above this trend line coming tomorrow, and I do think that will happen, granted, if earnings are good, and that's going to set the stock out of this bearish downtrend and into its bullish uptrend. And that is something that you gotta be very bullish about. And I do briefly want to address, some of the comments that I do see in the comment sections. Like, the comments don't bother me. You can say whatever you want. Feel free to have your opinions. Talk shit if you want to. But to sit here and say that this data doesn't speak for itself would just be ignorant at this point. Or to say that, earnings or good news doesn't matter to AMC. The whole reason people are short on AMC to begin with is because the fundamentals haven't been doing so good over the last 2 years. There's reasons for that, right? Not a lot of people go into movies. Why? Because there hasn't been a lot of movies to go see in theaters over the last couple of years. There was real reasons and pretty good reasons to short AMC over the last couple of years, minus the whole short squeeze factor. just minus that out. But fundamentally speaking, it made sense to short AMC. But now, does it really make sense? Especially if the vote does pass within AMC and the ape conversions, and they are able to pay off all of their debt. There's literally no reason to be short on AMC. That would indeed cause a short squeeze, in my personal opinion. There's no way that it would not cause a short squeeze, in my opinion. Now, some people are like, you know, why are people getting bullish on this conversion now? Why are hedge funds praising this? And maybe they do need real AMC shares. Maybe that's what it boils down to. But at that point, does it really matter if you get the short squeeze out of it? I don't think so. I think all that matters is the short squeeze, getting you guys your money back and making your money on this trade. I think that's what ultimately people care about, is making money on this trade. And obviously the corruption and all of that, addressing that is great. It's all fine and all dandy, but it's going to take a long time of doing this and making these videos before you do see a change. I think over the short term, over the next, call it year, people want to see a short squeeze. And I think to just use these external factors to be like, yeah, it's not going to happen. Yeah, I've heard that before. I just think that's the wrong way to look at it when the data is clearly here to show you otherwise. Now, speaking of data, the live short interest of free float, 22.77%. The amount of shares currently sold short, 117.27 million, indicating down about 500,000 shares here on the day. Not quite sure how accurate this actually is. There is the T+2 settlement time, so we'll have to wait probably till next week to see what the actual numbers look like for the day. But what I will tell you is these cost to borrow rates, baby, are going crazy. So you have a cost to borrow max of 855%. 855%. Yesterday's number was 515. 515%. You're at 855. Give me a break. This in and of itself is telling you something. Cost to borrow average of 632%. Insanely wild. And we were seeing a cost to borrow minimum earlier in the day at about 473%. So in line with what you would expect from the minimum, the average, and the max. Right now it says 7.25%, but I'm not convinced that's the actual number. And for whatever reasons, Interactive Brokers short availability is not updating, and doesn't make sense why, to be honest with you guys. So you can't really see what Interactive Brokers short availability is right now. Last we knew it was 103%, and I imagine it's even higher than that. Go figure. Now you can't see what Interactive Brokers data is telling us. Go figure, right? Just go figure. Now, let's go ahead and pull up some key technical indicators, and then we'll go ahead and wrap up this video, guys. So as far as the RSI, that is still not at 70. That is at 62.38. So there is some room to, you know, go to the upside. Now let's go ahead and pull up the moving averages. The best ones are the 50, 100, and 200-day moving averages. It shows you short-term trend and long-term trend. And as of right now, you approached and touched the 100-day moving average today. It'll be interesting to see what happens in after hours and towards the end of the day today. If we can actually break above that, that's going to be just a couple cents off of this downtrending line. So I do want to see a break above that. You can see we actually got rejected right at this level on January 18th and then proceeded to come down from there. So if you break out above this today or in after hours or tomorrow, that's going to be big. And then your next stop is the 200-day moving average at $7.83 per share. And boy, if you break above that, I mean, it's going to get very, very squeezy, guys. The 200-day moving average has held a lot of relevance over the last year with AMC. You can see back here the insane resistance you've seen. This was in December of 2021. Multiple times got rejected at the 200-day moving average. You got rejected during the big rally in March of 2022. You briefly got above this in August of 2022 when the stock went from $8 to $16 and then ultimately got rejected. And then you got rejected just back here in what was this, December 1st, and now it looks to be approaching this level again over the next couple of days, and it can tell you a lot if you actually get above that and you don't get rejected again. So if you can't tell, I am very bullish on currently what I am seeing with AMC. I have no choice to be. If the data does change, then that would change how I feel about this current state of time within AMC. But from my perspective here, things look a lot better now than they did weeks ago or months ago. You can look at the technicals, cost to borrow rates, you could look at the short interest, you could look at the market environment. Are people bullish? Are people bearish? You can look at all of these things. What's the Fed doing? Literally everything you could say. 2023 having a better movie slate. Like, I could make a whole list, and I probably will. Just why exactly things are better now than what they were in the past. And actually, we'll talk about that in the next video, because I do think that needs to be said, guys. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, guys. And if you don't see the video posted at 4 p.m. sharp like usual, it will likely be posted around 5:30, just because I do want to cover these large tech earnings for you guys, because it's going to have such a big implication for the markets and for your money in AMC. So that is it, and I will see you in the next one.